Hello, traders. Welcome to Price Plan Profit. Let's talk about sector rotation. Did you know that most traders will give up much of their profits from 2025 during the first quarter of 2026? Why is that? Because the shift is here. And we continue trying to trade this current market like we have been for the last 6 months, and it just isn't working. You can't just throw darts at any risk on name in the technology sector or the semiconductor sector and expect to rake in profits. Money is moving out of those risk on names and into the safer areas of the market, such as financials and industrials, consumer staples, small caps, names like that. Take a look at this graph from Koyfin.com. It shows obvious sector rotation. What was leading the market for much of the year is slowly but surely falling down towards the bottom of this list. And names that were struggling for the last 6 months are all of a sudden moving from lower left to upper right. That's further evidence of sector rotation. So, if the money is moving out of tech and growth names and into banks or industrials, financials, and the healthcare and small caps area of the market, I want to move with it. Take a look at the 10-year Treasury yield. As the 10-year Treasury yield rises, that's another indication that there is sector rotation in the market. So in this video, I'm going to break down the exact areas that I'm looking to buy the dip in these rotating sectors. I'm going to give the specific price plan profit targets that I'm setting for Q1. Let's get started. First up, I want to focus on the financial sector. It continues to make higher highs and higher lows in a strong bullish uptrend. On this chart, you can see Bank of America. I am interested in buying the dip on Bank of America here in my buy zone at 53.5 by 52.32. This would be a buy the dip opportunity for me, and my targets would be 55, 57, 58, and 60. I also want to focus on the industrial sector, and a strong name in that sector is RTX. My buy zone for the first quarter of 2026 on RTX would be 171.17 by 166.74. If price pulls back into this buy zone, I want to be long calls, trimming at 178.76 by 183.31, and then 185, 190, and 195. And I don't want to leave the small caps out. So I want to give you my buy zone for IWM. My buy zone for IWM is 251 by 248. Then I want to trim and take profits at 258, 262, 266, and 270. With all of this rotation, it's important to keep in mind one of the key disciplines of not chasing hype and no FOMO. What do I mean? I mean trying to constantly buy every small dip in your favorite semiconductor name or every small dip in your favorite tech name. There might be a lot of hype going on, but guess what? That's big money trying to get you to buy at the top so that they can sell you and offload their positions to you as you watch price fall and stop you out. We aren't going to do that going into 2026. Here at Price Plan Profit, we are going to remain disciplined. We won't chase the hype. We are not going to FOMO trade. We will wait for the levels. We will watch where the money is rotating to, and we will choose strong names within those sectors to buy the dip. So, buying the strength in rotation looks like this. Focus on these safer areas of the market, such as financials, industrials, small caps, and consumer staples. Look at what trades within those sectors. Pick out your favorite names. Find your buy zones and find your targets. Have a plan going into the first quarter of 2026 so that we can continue building discipline and consistency into next year. I look forward to seeing you in the next video.